What is going on? Macroeconomics, we're going to look at income, poverty, and wealth. So 15 minutes or less. That's going to be hard, but stay with me. So income is the amount of money you, I earn. We can earn it different ways. Maybe we have a job. Maybe we own a business. Maybe we put our money in the bank and it gives us some interest. Maybe we sell our things and we get some income from it. Wealth, on the other hand, is things. Maybe is my house. That's wealth. But if I sell it, then I get income. But until then, it's just wealth. Now, how do we measure income when we're looking at a country? We measure it through GDP. GDP. Do you remember the formula? I use the acronym sigma. So C plus I plus G plus exports minus imports. There we go. So that is basically consumers spending money. You spend money, then it's someone else's income. Investment from the private sector, they spend money, again, it's someone else's income. Government spending, someone else's income. And then exports minus imports. So therefore, GDP measures our overall income. And you can see at times income rises and falls as a percentage. At the moment, incomes throughout the globe are going down. And the reason being is because there's not much money. Well, there's a lot of money, but it's just not flowing. And income is a flow concept. It's not a stock concept like assets, wealth, but it's a flow concept. So there's money, but at the moment it's more like wealth because nobody's spending it. Good. So how do we, the next stage is to understand income inequality. So income inequality is when you earn more money than me. Why? I want to have equal income. But is that possible? I don't know. When we look at sort of the free market, when there's no government intervention in terms of a command economy, then the law or the forces of demand and supply will then attract entrepreneurs if there's abnormal profit in the market. And so hence they might make abnormal profit when others may not. So you tend to have a level of income inequality depending. Some people say, well, depending, if I work hard, I should earn more money. Fair enough. But then some others say, well, look, you're not working hard enough to be earning 500 million a year. And this goes to, what's his name? Michael, you know who I'm talking about. No, it's the CEO of Disney. So it's Michael Eisner. Michael Eisner, 500 million a year. So, I mean, there are arguments, pros and cons. Can you imagine? You could pay 10,000 teachers with that. Okay, so income and income inequality. How do we analyze it? We can use the Lorenz curve. Let's have a look. So, to do a diagram for the Lorenz curve, you have your x-axis, and that is the cumulative percentage of people. And then on the other axis, we have the cumulative percentage of income. Now, what do I mean by cumulative? So that means that people earning the lowest 20%, and then we look at 30%, that takes into account the 20%. 50% takes into account all the other ones. So it's cumulative, it's accumulating until they reach the 100%, either in population or in income. So when we're looking at the overall income of the UK, we can look at the GDP. If you want to look at the actual figure, you can also find it on the internet. In most cases, you see it as a percentage, but you can actually find the figure. So if this line is the perfect income distribution line, because let's say 50% of the population will be earning 50% of the income. So 50% of the income distributed among 50% of the population. 20% of the income distributed among 20% of the population. There we go. And so forth. So this line is the perfect income distribution line. Perfect income distribution. Also known as the equal income distribution line, because it's equal for everybody. What you earn is what I earn. Oh, you didn't see that coming. Is it? Do you earn so little? No. Okay. Does that exist? You can try to figure. I was thinking about it. I can only think of Cuba. They earn. They have a max wage of 120 pounds a month. So I imagine that's the max they can earn. So on average, most people must earn the same. They cannot earn more than that. But other than that, I couldn't think where. Unless you find some sort of command economy. North Korea. Well, if you're not in a command economy, then you're likely to have an equal income distribution due to the forces of demand and supply and in the free market. And you have a Lorenz curve. So the Lorenz curve is something like this. Lorenz curve. You can see it diverges. Is this blue line? It diverges from our perfect income distribution. So basically, this is how unequal it is. The more it diverges, the more unequal distribution is. Now, think of all this, the half of the square being all the income there is. So it's 100% of income. And this slice of the pie, the bigger it gets, more of that income is being distributed towards a smaller proportion of the population. And we can literally see that by looking at the curve. So let's see, 50% of the people have how much? 50% of the population have 20% of the income, of the overall income. So 20% of the overall income is spread among 50% of the population. So what about the rest, the 80? Where's it going? Well, ask the other 50% who have it and probably are spending it. And if income, if there's a lot of income distribution, if there's a high level of unequal income distribution, you can think what they might spend it on. Maybe they just take a plane to go play golf somewhere, spend hundreds of thousands on things that you might think they're not worthwhile. Anyway, that's down to them. So this is the Lorenz curve, and what pulls it away? Like what creates this unequal income distribution? I use the acronym UWIPE. Yes, U. U. Why? Because one of the reasons is unemployment. W I P E. So the other one is wage differentials. This is from when you took that lesson on labor markets that you were paying attention, my dear economist. Wage differentials we have either by geography. Some people earn more money because they're in London, whereas if you're out of London, you might earn less doing the same thing. Different markets. So you can see the financial sector tends to earn more money than, let's say, the cleaning sector. Then we have wage differentials, which are unethical. People that earn more money just because of race, age, gender. So that's another reason why you might have this sort of diversion. I is for, I don't know. No, I know it. It's illness. Yeah, people getting sick. You know, not funny, but if you get sick, you're unable to earn money. So if there's a large number of people sick, then you're gonna have more unequal income distribution because they're not able to earn money in comparison to someone who is not sick and is working. And then we have P for pensions. So, you know, once someone is old enough, then they receive a pension. And you might not be able to work, so your income will depend on your pension. We all eventually time passes for everybody, and depending on the pension, you know, the difference between some and others, I mean that there's more of a diversion between the Lorentz curve and the perfect income distribution. And finally, education. Yes, you're more likely to be employed if you have some sort of skill, if you have something that differentiates you from someone else, if the supply of your type of talent is in demand and there's not many people supplying it. You can look at labor markets for this, for more of an analysis. So education tends to differentiate you, and it might earn you a higher salary than someone else who might not be able to read or write. Yeah, so that pulls it away. Now, what pulls it closer to equal income distribution? How can we narrow this gap? And it's known as a macroeconomic objective of a nation, of a government, not to have a Lorentz curve that diverges too far from perfect income distribution. Otherwise, there'll be civil unrest. People might find it unfair, inequitable. They might see it as the government not doing the right for the people or for the majority who will not be earning as much as the small percentage who are earning a lot. And you see things like that happening, civil unrest due to this. Take Brazil in certain areas. So how to fix this? Well, we use another acronym, and this is BTEC. And I don't mean a BTEC as in you need to study BTEC, but this one is benefits. And all these are things the government can do to correct this market failure. So benefits such as, some are benefits you might receive because you contribute through your taxes, such as, what do you get? You pay national insurance, so you can get some contribution back from it. Whereas some do not require you to contribute. Housing, universal credit. Actually, no, for universal credit, you do need to contribute, yeah. But for housing or childcare, discounts, you do not need to contribute. You do not need to pay your taxes. So those are benefits the government might give you. And the more benefits they give, yes, the higher the level of universal income you get if you're unemployed, then the more they can narrow that gap between the ones who earn a lot and the ones who don't earn much or don't earn at all. Then we have taxes. That's a popular one. So taxes wise, we have either progressive, regressive, and proportionate. So this is a progressive. What do I mean by progressive? It's also known as the Robin Hood of taxes. So the more you earn, so that's your income, the more you'll get taxed. So your tax rate goes up. Whereas a regressive tax is this is a tax that affects more the poor than the rich. So like VAT, you know, if a rich guy and me, poor guy, we're buying something, a high VAT is going to affect me more than the rich because it's going to take more out of my proportion of earnings. So hence VAT tends to be a regressive tax. So if we're to fix this and have more equal income distribution, then we'll be looking at progressive taxes. We also have duties that they might be on specific things that might target a particular type or groups of people. Have alcohol, gas duties. It's like taxes. E and C. So we have E is for Creating employment. So they can create employment by investing through fiscal and monetary policy. So fiscal policy, health, infrastructure, defense, education. By investing in these areas, they generate work, and people have jobs, and then hence that will reduce the income inequality. And C is for, reminds me of Cuba with their maximum wage of 120 a month. And it reminds me of minimum and maximum wage. So by setting minimum wages, and maybe putting it, increasing them, they can reduce the income inequality gap. I mean, is it good to have an income inequality gap? That is the other point. So it is known to be, it's hard to tell just from looking at that curve. So they have a coefficient that helps, and that is the Gini coefficient. So the Gini coefficient is calculated by looking at this area of the of our diagram, and so half the square, and it divides it into this bit inside the curve A and that bit outside of the curve B. So the whole thing is considered 100%. So it's A plus B. And out of the 100%, how much is the difference? How much are the small number of people taking in comparison to the rest? So that's A divided by A plus B. So A plus B is your 100, and A will be how much they're taking away from it. So here in the UK, I think something like 33%. So the result will be 0.33. So that's the Gini coefficient. Now, what does that mean? Yes. Okay, so it kind of tells you how far the curve diverts. Now, if it diverts by 1, then that means the Lorentz curve is all the way here. And 1 means that only one person is taking all the income from the country, and you and I are earning nothing. If it's 0, then it means everybody's earning exactly the same. So both are extremes, and they're not considered good, not at all. So you need to have certain level of inequality, because people who earn money want to earn money because there's that chance to earn more than someone else, because you're entrepreneurial, because you react quickly to market conditions. However, what is a good level of inequality? Well, it's considered to be, if we look at figures for Gini coefficient, if it's 0 up to 0.25 is considered to be perfectly distributed. So it's sort of perfectly distributed. I know, even though it's not perfect, but it's considered perfectly distributed. Countries that have a coefficient of 0.25 are usually around Scandinavia. You have Norway, Sweden, with levels of 0.22, 0.25. So they're considered to be, they consider income to be perfectly distributed. Then if we look at levels of up to 0.4, 0.40, then it's considered to be a relative equal distribution. So it's considered is relatively equal. So relatively equal. Now, 0.5 or more, then this is considered to have a high gap. High gap in income distribution. In terms of when governments tend to act or put more pressure on policies to adjust this income distribution, is usually here when they see Gini coefficients of 0.40. 0.40, as soon as they hit that, then they try implementing policies to adjust income distribution, because that just means that very few people are having too much of the overall income in that country. So examples of that are Colombia with like 0.60, South Africa 0.70, So very high levels of unequal income distribution. So you can imagine the Lorentz curve diverting a lot from the line of perfect distribution. So that helps you with income inequality. Now, the other point is poverty. Poverty, we have either absolute or relative poverty. Relative poverty is, for every country, is different because it's relative to the average or the median. So it's known, someone is known to be relatively poor if they're earning 60% less than the average or 60% less than the median. I know they're different figures, but that's what the book says. So that's relative poverty. So Mexico, for example, the average wage is 16,000. So if you earn 60% less than that, so what is for like 4,000 or less, then you'll be considering relative poverty. Yeah, so there's not much money to survive in a year. Now, what is absolute poverty? Now, absolute poverty is someone who earns, no matter where they are, $2 or less. Actually, I think that's been adjusted to $2.5 or less, according to the World Bank. Now, another way to look at absolute poverty is also when someone cannot afford their basic necessities. Basic necessities, we look at the Maslow hierarchy of needs. The bottom grid shows us physiological needs, such as food, shelter, health. You know, if any of those are at risk, then we cannot pay for any of those, then we are in absolute poverty. And $2 seems to be what is considered to be absolute poverty, that or less per day. Do you and I have absolute poverty? No. A lot of people are in absolute poverty. I was trying to look at stats. So around 40% of the world are on $5 or less a day. That's 50% of the world. So 7.9 billion people. So that's 3.4 billion people are living on less than $5 a day. I also, what about $3? That was something like 30%. You can remember that. $3 a day, 30% of the world living on $3 or less. That's a lot of people. 30% out of almost 8 billion people. So 2.4. That's 2.4 billion. 2.4 billion. How many people in India? Oh, something. I'm not that sure. Maybe 2 billion, something like that. But that's a lot of people are living on very, very little worldwide. So it puts, I guess, poverty into perspective. Not that we're lucky, because this is what everybody should have, but it's, I guess, thinking how can it be fixed, and what could be done, and solutions. And that's where I leave you. Good luck with your studies, and now you know income, poverty, and wealth.